Alright, so before I go into this little video, we notice how AUD-USD is making a drastic move to the downside. So right now, I would like to call this like a falling knife. We don't want to guess the bottom. But as this video goes on, I'm gonna be dragging over this daily video or this daily time frame just to kind of show what I'm going off of, like on a long-term bias. But the first thing that I want to point out is that this 200 EMA, which is the average price of the past 200 days. So like right now, taking price action off this price right here, right? Let's say if we were to maybe 76327-ish, that's the average price of right here off this daily. So every time we go back a price, that's the average of 200 daily sticks. So like, say like right here, the past 200 days, this is the average price. So typically what this is used for is, at least for me, when price gets away from it really far away, like up here in this area, right here, right now, way down here, there's a high probable chance that price is going to go and return to this moving average. That's what you're looking at here. So now this is where we're going and we're finding the bottom. Okay, so we don't want to guess where the bottom is, right? So we want to just go and we want to wait till we find out and see where the bottom is being created. Because like I said, we don't want to guess. We can't control price volume, right? We don't have those big of account sizes, so we got to let other people show us where the bottom could be. Okay, now as you see, there's a big rejection right now, so price bottom can be somewhere in here, right? Well, a good typical area to where you can draw, a little quarter level would be the 73500 area, right? And it's funny how price was there right before it took off, right? Okay, but like I said, we don't want to guess where the bottom was. So if we were to go and we were to draw a little zone around this area, right? So basically what this just what this indicated was that potentially there was enough orders down here to make price reject off of it. So, or I guess you can explain it as price filled in so many orders to where eventually there was no more sellers, and basically, if buyers and sellers are, how would you say it? Buyers and sellers are even, right? Price is not going to move. So as the sellers are, if there's as long as there's more sellers, price is going to go down. As long as there's more buyers, price is going to go up. So now we see that there's more buyers getting into it, and these wicks are implementing that. There's a lot more volume down here in this area. So what we typically can do is have buy limits all in this area, right? And you can, go after, 73500 area, because that was like a quarter level, right? So now you can put your buy limits down there to basically play. That's what you think is a good returning price, because sometimes price likes to retest that area and pick up more volume in those for the orders. Also, the buyers down here could be taking profit up here right now, causing this to go back down. And as you can see, we're just wicking away from it. This little demand zone. Notice how we just rejected from it, right? come back down to revisit it, reject from it again. So now it's starting to look like that bias was correct. So now the question is, okay, so where would be a good take profit? You know, if you were to take this on a buy down here in this area, you know, what would be a good take profit? And you know, you can go off of past structure, right? So where would be a good structure area? Well, to me, your like least riskiest where you could take profit would be somewhere in, you know, I guess you could say in this area right here, because that's where past structure is, right? Maybe you take profit, I don't know, maybe in like the center where all this is. So if you look at it in the center of all this, you see that you had a rejection off here in this area. You went through this area and you came back from this area to almost retest it off this, right? So that could be a good little indication of like a middle ground, like an equilibrium of this price area, basically, right? Because it would be all in here, okay? So if we were to extend this over, I think this will extend it, yeah, okay. The price extend that, yep. Okay, so we'll make this red. All right, so that's I guess a good, you know, first take profit because of past structure. Okay, let this play. Okay, so now it's coming into our take profit area, right? You know, and typically if people start taking profit, maybe people start getting out of their buys, and all of that, price will start rejecting like it is right now, right? And what we typically want to do is pay attention because a reversal pattern could be making, you know, nothing ever goes up and down in the markets forever. There's going to be a reversal at some point, right? And so what you're seeing are people taking profits, maybe the maybe people that sold here, or I would say maybe bought here, right? Thinking that this is going to be the buy area, right? People bought here, and now they've held all this drawdown to all the bottom, and so now price is finally back into the area, and they're, you know, getting out of their trade risk free. You know, you got to think that some traders are in that mindset. You know, others, sellers, maybe sold right here, didn't take their profit, and now they're coming and taking their sells off the table because they didn't take profit down here. Maybe the people that bought here and here are taking profit potentially up here in this area, right? But remember what I said earlier is my analysis is to the long term because of that 200 EMA. You know, that gives me high probable areas that I should be buying. Right, and as you can see, there is a little reversal pattern being made. You know, and I'll show this in more examples later on, but, you know, maybe there's enough volume that got behind here, right, to move it to the downside to where you could have sold the 61A area, right, had your stop loss right above this zone, you know, calculating your risk, maybe price goes back down to, you know, say this area right here, because like I said, you know, nothing, you know, goes up and down forever. And as you can see, you know, this would be a good area to take profit past 61.8 extension if you're, you know, trying to buy and sell. But for me, you know, my bias is to the upside long term. Now, as you can see, price is moving away from this area. And then as you can see, price comes back to tested it again because, you know, price likes to, you know, break zones and then retest. And if we were to measure this again, just like we did in before, you know, going from here to here, you could be loading up now again in the 61.8 area. If you were wanting to take this as on the sell side, you know, and you can even say there's maybe like a little ugly head and shoulders in here, you know, a little bitty head, shoulder, 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 shoulder. And as you can see, we're rejecting now from that area. Price came up, touched the 61.8, 78.6, didn't come up and create new higher highs. Analysis works. Maybe you can even measure from this high to this low, given the same thing. 61.8 area entry in this area, touching the 78.6 and not breaking the highest high. So if you went with this analysis to the downside, you could have been correct. But this is like a little reversal pattern that I like to go after. And now this is coming and, you know, stalling in your potential take profit if you wanted to take profit here in this area because of past structure, right? Past structure. And as you can see, we're getting like rejections off this zone because there's potentially a lot more buy orders down here, right? I'll even make it blue. Okay, notice how we're just playing in this area and stalling. So this zone is taken out. Notice how we're rejecting off this zone, and now we're coming and playing in it, right? That just means that these buy orders, or the buy volume, like you could say the order books or whatever you want to call it, it's getting lower and lower and lower. These walls, these buy walls are being eliminated, right? And as we can see, price is returning back down to our first original area. And now we just got a big spike to the downside. Okay, so cool. So it's looking like the price is just going to continue going down. So now, excuse me. So now, you know, I want to look at, okay, well, you know, obviously my bias is to the upside regardless. You know, I did take 60% profit off the table in this structure right here, right? Just in case, you know, price was to go down and return to that area, right? But where would be another good place to set a buy limit if, you know, if the direction that I think it's going to go in, which is to the upside, would be at? Because possibly, since price rejected right here off the first time in this wick, off these wicks, came down and now it's kind of playing this area, that means maybe the buy walls move down more, right? So if we were to look at the daily, and I can't switch time frames on this replay mode because it'll change, we go and we look right here. So we look in the past, right? We notice that we have 735 marked, right? And then we go and we look at, okay, well, where the last time on the daily chart wise, daily candlesticks, where the last time we went down to that area, how far were we? Okay, and we mark right here 73300, perfect even number. We scroll back and look at more data. We see that price is rejected off here again. See that price is rejected off here again, right? We see that price is rejected off here, but the opposite side. Okay, so there's a good high probable chance that price is going to reject and continue, right? So now knowing that, right, price off that very last 200 day or very last daily candle price didn't go below 73300, okay? So if we were to put a buy limit there, let's see what happens. And then you got to remember, you got to calculate your risk and all of that. I guess I'll go into that real quick as we get lower to this area. This could be like a really high probable daily demand zone that was being made from here to here, right? It's where your buy limits can be. It's all in that area, right? Let me expand on this real quick. So notice how if this is your demand area that we're attacking right here and it wicks below it, but it's rejecting from it, right? It's still valid. So if we were to go and we were to, calculate risk, what could be your potential risk to reward in that area? So, you could have, if that was like price of, 72876, that's a lot for AUD USD to drop, in here. And that was also, I believe, the lowest. No, it wasn't the lowest. It's been in 2016, but that's just a really high probable area that price could, stay above, right? And if it breaks that area, of course, we start, we take our loss and we start reevaluating. But now we notice that price came, wicked right off the 73300, went a little bit below it. But as you can see, there's a potential that price is making a bottom there. Okay, and so we can do the same thing that we did here, make this zone, right? If we were wanting to play that trade, right? And we do notice that we keep getting wicks off this area, right? It's a good thing, wicks off the area. That means there's a lot of buys in that area to keep price above it. So that's really good going towards our way. And price is just playing in our demand area, but you got to remember price was made off higher time frames in this area, right? So now we're seeing a rejection off this, so this has to be a strong demand area, right? So technically if you took entries off here, you'd be up 60 pips, 70 pips, right? So now you're seeing price stall, okay, in this area, making reversal patterns and whatnot, right? Remember, nothing ever goes up or down forever, right? And then if you believe the market moves in phases, from what this is all making right now, this is kind of like an accumulating phase, right? Price is just ranging from bottom to top, bottom to top. It's just ranging right here, collecting orders and all of that, just anticipating where the bigger move could be in the future. Okay, so now you're just seeing price reject off here. You're seeing divergence being formed. Oops, seeing divergence being formed here. The volume oscillator RSI, relative strength index. If you use this, all it's showing is that the volume is decreasing and going the other way, while the trend is still to the upside. So potentially we can see a return back down to the area. But like I said, I'm still bullish long term. I have buys, here in this area, and now we're just watching. And this trading takes patience, especially with AU. Every pair moves at different speeds. You got to understand that, right? And AUD USD is one of the slowest moving pairs. So now we're seeing, a spike to the bottom. You know what I mean? And like this, if you don't believe in your analysis, you don't understand what you're looking at, you don't determine your risk, where would your risk be, for this trade, this could be scaring you out right now. But, off of my, when I was doing it, off of my past, when I was taking these trades and stuff, I determined my risk was here. So I was looking at, okay, if my stop was at 72841, right? My take profit was returning back to this 200 at the time, which was like around 765 area, making that even number quarter theory level. My risk to reward parameter was I was risking 7 to 1. That was my risk to reward, 7 to 1 right here. 7 says risk to reward ratio 7.31. So that's what I was going after. My stop, like I said, was 72834. Okay, so as we just let this play, okay, we notice how price got down there really fast and it got bought up really fast, right? So now we're seeing price go above our entry again, right above that zone. We just had that impulse move to the downside. Now we're playing again above it. Then all of a sudden we had a spike down, right? And if you wouldn't have played any of this, you would have waited for this entire thing to play out just like it did. You could have entered in on the next candlestick. And the reason why is because you notice how the move went down so fast, price spiked up so far away from it, opened, right, which is a good thing, and then price went away from it. If you could have waited for all of those possibilities, right, and then got in here on this candle open, okay? Instead of holding all that drawdown, going through all those emotions, you could have waited right there to enter. But we didn't know that was going to happen, right? But we had a belief, a feeling that, with good risk to reward, as you saw 7 to 1, price, it was worth the risk, right? So now, we're holding the trade, everything's looking good. That was a good confirmation that that people were getting behind that order, or getting behind that belief that there was more higher probability to the upside. As you can see, price is now going away from it. It's getting out of our strong demand area of the daily and this strong demand zone on the hour that we drew. And these two blue lines were that strong demand daily, and this baby blue box was that hourly demand. And as you can see, price moved away. Okay, so we're holding it. Like I said, we're not scalping, we're not day trading. This is a long-term trade. You can play the moves in between because nothing ever goes up or down forever, right? So you gotta let the market breathe and do its thing. Turn it up real quick so it goes faster. Man, so you notice how price is getting so like choppy, like it doesn't know which way to go. That means, the buyers and sellers are basically neutral, right? But it's a good indication that people are supporting that this buy area is valid, right? It's keeping the volume above it. So maybe smart money doesn't want price to go back down in this area. I don't know. But this is a good indication that price is keeping above this area. Notice how we wicked away from this area. Now it's got to go past all these sell walls if this is going to be a bullish move. But that's how you know that there was a sell wall or a bunch of sell walls in this area, because price went up and wicked away from it. Those orders got filled, price rejected. But now you see price is just moving into it, moving into this strong area. Now we finally broke away. We broke away from this area. We are up 134-ish pips right now, right? So, what would be a good take profit to, in your opinion? Maybe since you took profit here in this area at 7435, maybe another good area could be off of past structure. Maybe you could have went with 7.5, right? Just because if you notice all those wicks in that area, right? Wick, all that stuff. Maybe you could have took a more conservative take profit, just off of this. Maybe you had the off of maybe this wick that it's at right now, and you notice where the price is off of this wick right here, this wick right here. It's in like the equilibrium of here. It's wicked off here, wicked right here in these two areas. I'll zoom in so you can see it. So you can see all these wicks right here, these wicks right here, strong bodies through it, wicks in the past, these two wicks right here. So I mean, that could have been your take profit right there for take profit 2. That's on you to decide that. I don't know, what your eyes are seeing. It's all speculation, right? So those are your 2 take profits where they could have been, in my opinion. Okay, so we notice that price is kind of stalling out right now, right? And now we, I guess you could say, broke away from where we could have taken profit. So the 75 didn't look like it cleared, but the that second one off the I guess you could say, where was it? Off this wick right here, which had this wick, these wicks, all that stuff. That take profit could have happened. And as you can see, you had a double top in that area, right? A normal M, a little reversal pattern that you may or may not have identified. But what we do notice is that price, we measured from here to here, is indicating that there's an uptrend, right? But over here on this volume oscillator, we notice how price was in a downtrend. The volume was showing that there's a potential downside movement. And as you can see, when we got it here, we returned and pretty much went just as high as the last time, but yet price still moved down more, right? So you could have made a little straight right here, a little straight top, and then still diverging down. But how I like to draw fibs, and what you could have done is measured Fibonacci from high to low, okay, and played off this 61 area. Maybe you wanted it to make more sense, and you drew a zone up here in this area because of these wicks in the past, and we'll go scroll all the way down to the 61A area. So we drew a supply zone from the 61A area to the top of this wick, right? Let's put the style as background, background, it's red, okay? And then we see this little rejection off of it, right? Now all of a sudden your price or your trade is in a little bit of drawdown. So, you know, did you calculate your risk? And, you know, you could have done the standard, you know, putting your stop loss above, you know, this relative high right here, you know, giving yourself a 20 pip stop loss risk, right? And then we do the same thing with your take profits. You know, maybe you drew your fibs from low to high, right? And you notice that price could possibly go to this 61.8 area, right? It could. We don't know. But it's something to keep in mind. So maybe you wanted to take profit here. Let's just mark it. Good take profit here. So if you were to take that sell, right, you were risking 20 pips. It was about a 4-to-1 trade, right? You could have gained 80 pips. Okay? Maybe you didn't do it that way. Maybe you did your fibs from this low to this high, looking for this 61.8, which, you know, is going relative with this past structure, you know, all right here in this area, right? You see the wicks, strong body, these wicks. So just, you know, it depends on you. And then that take profit would have been so that would have been a 2-to-1 trade, right? So you could have caught, maybe you could take off half your profit there at that first 61.8 for a 2-to-1 trade and then leave your other half running and maybe catch that 80 pip run. We don't know. But that's why you calculate your risk to reward, because you ultimately will never know the outcome of a trade. You know, it's just all you're doing is following those patterns over and over again. You don't care if they win or lose. You don't know which ones are going to win and lose. But you know that that pattern works for you, right? And if you calculate your risk and you always have a higher, at least 2-to-1 risk to reward, you can, in theory, win your trades, right? You can lose more than you win and still come out with profit because your risk is higher than 2-to-1. Okay, so let's play and see what happens. As you can see, there was a very big bearish move. The reason why this move happened was because of news. You know, you want to keep in mind of what news is going on, but actually, you know, this could have been a numerous amount of things. You know, at the time, there was a bunch of articles coming out about the trade war with the United States and China. That could have contributed to it. It might have not. I don't know. I don't know who or, you know, many people could have taken the sell. We just don't know what pushed the price down. But as you do see, all these rejections, if we were to draw fibs from here to here, there's the 61.8, right? Maybe you draw the fibs from this low to this high. All right, hold on, let me delete some things so I don't make this confusing. All right, so if you drew your fibs from here to here, 61.8 was right here, right? And maybe if you drew the fibs from here, this low, to this high, 61.8 was right here where it rejected off that area, right? It's all speculation. You know, we're taught so many different ways, so many different things, but, you know, that's the difference when drawing trend lines, supply and demand zones, areas of support and resistance. You know, just because you're looking at it and thinking one thing doesn't mean that the rest of the world is. So you gotta, you know, take into consideration, okay, how many different ways can we draw it? Some people might have drawn fibs from this low, right? Some people might have drawn it from this low. Some people might have drawn it from this low, you know, and some people might have drawn it from this low. Ultimately, you know, you got to take into account of what everybody else is what everybody else is doing. Okay, and keep that in your mind, and that's why you pay yourself as you go, right? Because as you can see, there's rejections happening in this area because there might have been people thinking, okay, I need to take my profits here from this sell, right? Causing prices to go up. Or, you know, people are, oh, I'm still in the bullish mindset. Maybe I didn't get in the best price down here in this area. Now is where I want to take my entries for a buy. Maybe people that bought here never took profit right here, and they're trailing their stop loss, and their stop loss was in this area. We just don't know. There's so many variables that can move the price, and that's what we take into account of everything. Okay, and as you can see, price is getting lower and lower. Okay, and now price is coming into that 61.8 area that we drew in the past from this low to this high, right? This 61.8. And then you notice, so if we were to extend this buy area, this is the top of the zone, the 61.8. This is where price has potentially wicked in the past. Okay. We notice, you know, this could have been that 80 pip trade. Now people are taking profit. How many people are going to take profit on this? You know, how many people still think that overall this is just a downtrend? You know, so maybe they loaded up here on sales to push this down even further. Okay, so if this was a good indication, right, for you to take profit on the sell side, now you could be, if you were in my mindset, a bullish mindset, right, now you can start taking trades to the upside in this blue area, right? So now we notice potentially our analysis was correct as far as these buys were happening down here. It took the volume or took price to move down to this area to, you know, start actually moving the price up. Now maybe what could have happened is typically everyone's taught this way, but we notice how you could have bought buys in this area, but how many people could have put a stop loss right below this relative low, right? Right below this low, because that's how a lot of people are taught, you know, put your stop loss right above the recent highest high or lowest low. You know, you got to take that into account. You know, we talked about the trade up here before. If you would have took the sell, you could have put your stop loss right here. But how far do you really want to put your stop loss in order for you to stay out of trouble, like what could have happened right here? The people that bought here put their stop losses right below this recent lowest low, were now stopped out, and then price rejected away from it. Okay, but we notice, you know, maybe you drew, you know, a trend line from off of all those wicks, right? Price here, wick down, stopped here. Third time it touched right here in this area. So maybe you didn't get in, right? Maybe you didn't get in this trade. Maybe you patiently waited because you wanted to see if other buyers were going to get in. That's, you know, that's something I like to do, is I rather wait until I see other buyers or sellers get into the market before I take the trade, right? And so it's funny how price comes back and retests this area. Now, what if you were to draw fibs? Actually, what if you were to go and measure divergence from here to here, right? Notice how this is like a downtrend. But then when you take that same area, you notice how this is uptrending, right? So now, if you were waiting for that retest, you could have measured fibs from low to high, right? And then you could have bought off the 61.8, which was in this zone. It's a strong demand zone off these past wicks right here. Low to high, 61.8 entry, perfect entry. And ultimately, this is, you know, a lot of people's bias, because typically the average person draws their fibs from low to high. So you can anticipate that a lot of people are looking at this 61.8 area, right? So there's so many confirmations in that area, but just because that this is right one time doesn't mean it's going to work every single time, right? So you could have bought all in this area. Okay, now it's the same thing. Okay, where should I start taking profit? You know, am I looking long term? You know, do I want to hold the trade maybe back up to this potential area right here where it was in the past, or I mean that we came up, we reversed here before, we had strong candles through it, we had a strong wick to reject from it, we had the strong candles to go back through it. So this could be another good area to take profit for the short-term trades. But you know, if you are you know, looking long term, it all depends on your risk to reward factor. Like, I don't know what your plan is, what you're going for. Like, maybe you waited to this trade right here and you only risk, you know, 15 pips, right? To ultimately maybe go to back to here for 60, right? Another 4-to-1 trade. Maybe you're looking long term, right, for that biggest move to, you know, maybe the 75 where we thought it was going to go. Maybe 755, maybe 76. Like, you just look at past structure and, you know, decide where you want to go for. Okay, but maybe traders were looking at this. Maybe you can measure it from this high to this low, because we haven't had a really solid retracement yet, right? And then we notice that this is a 61.8 zone. You know, we've reversed in here in the past, right? Maybe you can draw little trend lines just like that for price to potentially go up, hit this area, maybe bounce off this trend line and back down. Maybe there's a bunch of other traders looking at this move, so it could be wise to take a little bit of profits off the table in this area to pay yourself, right? You just gotta remember, the market never goes up and down forever. It's gotta breathe. Right? And then just like we talked about in the past, you know, if price is so far away from that 200 daily moving average, that daily EMA, you know, you have high probable chances of it going back to that area. Just as it could take months. We just don't know. Now notice how price comes back down to the area once again, wicks off this trend line, right? It's wicking off this 61.8 zone that a lot of people have drawn from here to here. Maybe you missed price entry off this area. Well, now you just had your second chance to get in, right? If you believe the bullish scenario is valid. And now we noticed that we start going higher back into that zone. So an obvious rejection off that area, showing you that people are taking profits. Maybe people are getting stopped out. And now we start bullshitting in this area. Now notice the same thing that we keep pointing out. Notice how we're uptrending here, but we are not doing anything on here. We're downtrending. This reversal pattern you could have identified to notice how people are getting in on the sell sides, right? A lot of volume just came through, and you could have drew your fibs from high to low, start taking entries off the 6218. But as we notice, prices are getting higher and higher for that long-term gain. Right, and we could have, made this little trend line to fit perfect, as the candles printed out and played, just like we want them to. But I'm still bullish to the upside on AU.